The CEO System: 8 steps to ensure your business's financial success. It is crucial to your business's financial success to develop and utilize accurate sales, cost, and revenue forecasts. These forecasts allow you to create a budget, anticipate financial problems, and make fiscal changes that will ensure that your business remains profitable. To help you with this process, CEO Systems has developed a simple system that will walk you through the 8 steps of developing and utilizing financial forecasts. The 8 steps to financial success that we'll be covering today are: estimating your projected sales, estimating your projected operational cost, calculating your projected revenue, creating a monthly and yearly budget, utilizing your profit and loss statement, keeping your business and personal expenses separate, establishing an emergency fund, and hiring an accountant. Step 1. Estimate your projected sales. Forecast all sources of projected income from your business. Remember to factor in monthly business growth and peak sales times. You can use the past year's sales statements to estimate these numbers. Create a high, middle, and low forecast. Your high sales forecast can be used as your sales goals, and your low forecast should be used for budgeting purposes. Step 2. Estimate your projected operational cost. Your operational costs include all fixed and variable expenses. Fixed costs are expenses that remain the same every month. For example, rent. A variable cost is an expense that changes each month. To estimate your variable costs, look at the previous year's expenses and make an educated forecast. Create a high, middle, and low forecast for all variable expenses. Projected operational costs include costs such as the costs of purchasing or producing your product or service, sales and marketing costs, payroll, payroll taxes, workers' comp, and employee benefits, taxes and liability insurance, operational costs such as rent, gas, electricity, shipping, etc. Separate your expenses using costs of goods sold. Some businesses find it beneficial to separate expenses that are related to providing or producing their service or product from other expenses. This is referred to as costs of goods sold. Costs of goods sold are the direct costs that are attributed to the production of goods sold by a company. This can include expenses such as direct labor costs, supplies, or materials. By separately identifying the costs of goods sold expenses, a company can determine their income before operational costs. Step 3. Calculate your projected revenue. Projected sales minus projected operational cost equals projected revenue. Projected revenue is the calculated forecast of your profit or loss. Some reports will indicate this as net income. Step 4. Create a monthly and yearly budget. Prepare an estimated budget using your lowest forecasted sales, cost, and revenue numbers. If your business is seasonal, it is appropriate to not have a balanced budget each month. Using your forecast, anticipate the amount of money that you will need to have saved to cover your expenses in the slower months. Step 5. Utilize your profit and loss statement. Your monthly profit and loss statement will show you the amount of income that your company generated, the amount of money you paid in expenses, and your overall revenue. Compare your estimated budget against your profit and loss statement each month and make adjustments. Step 6. Keep your business and personal expenses separate. When you commingle funds, it can be difficult to determine your company's financial situation. It is important to separate your business bank account from your personal bank account. Doing this will ensure that you can accurately keep track of your business's income and expenses. Step 7. Establish an emergency fund. Keep in mind that even the best financial estimates are educated guesses based on historical data. To ensure that your business is financially secure, have an emergency fund available to cover any unexpected expenses. Step 8. Hire an accountant. Some businesses have a very complicated financial structure. If you do not understand how to prepare and utilize your company's financial statements, seek the assistance of a professional. They can help you to set up a financial structure that fits the needs of your specific business. Utilize these 8 steps. By following this simple 8-step system, you will be able to anticipate financial problems and make changes before you start losing money. We hope that you've enjoyed this presentation, and we'd like to invite you to visit our website at www.ceosystems.net. We wish you an efficient and productive day.